Hello, Marc Ostwald from ADM Investor Services International, with some thoughts on the inflation trade, particularly how it seems to have disappeared. And yet on the other side of the coin, we seem to have a sharp rise in a lot of commodity prices. But let's start off with a chart of the US 5-year yield versus the 5-year break-even inflation rate. I think the key part here really is that we had a very steep rise through much of Q2, particularly towards the back end of it, and that has completely tailed off. So basically, as far as the market's concerned, whatever the inflation rate we got to, there's going to be no further pressure. Is that buy-in to the Fed? I'm not really quite sure. My next chart perhaps tells us why we've got so much stability in markets, and that's why we're probably not seeing so much of an inflation rate. And this is a chart of the US 1-week repo rate versus the Treasury's cash balance at the Fed. The important part here is the Treasury is running down its cash balance at the Fed and thereby taking money from the Fed and injecting it effectively into the banking system, while also rolling off a substantial amount of its T-bill issuance, which basically forces banks and other investors away from the T-bill market because there's less available, into longer dated paper and indeed to other assets. Nevertheless, if we come to my third chart, and I will admit that obviously there's a horrible base effect in here, but it is the mentions of inflation pressures in corporate earnings, which, as one can see in Q1, has escalated very, very rapidly. Not to the extent that that chart would seem to suggest, because a lot of that is coming from a very low base, but nevertheless, it's much, much more frequent. And that's something we need to take on board, because basically the corporate world is telling us they feel more pressure and they're going to pass it on. And they feel they've got the capability to pass it on as well. So what's been the story in the second quarter so far? Well, the most notable aspect, if we start here, is with agricultural goods, corn, soybeans, wheat, all basically gone exponential. Some sort of a little bit of a correction yesterday, but this is all about Chinese demand. It's about very wet weather in Argentina in terms of soybeans, very dry weather, and a very, very some late frosts in Europe, very dry weather in the rest of South America, giving concerns about the yield for grains output this year against the backdrop of voracious Chinese appetite. But markets tend to like to keep an eye on oil as their inflation proxy. And as we can see, WTI crude future has basically been trading sideways for quite some time. And effectively, it's balancing out those concerns about whether demand will pick up as strongly, particularly latterly, obviously, given the tragic rise in infection rates in India, which had been expected to be a big buyer of oil, particularly for gasoline demand. But that sideways trend is getting ever narrower. And as one can see from my sixth chart today, which is the US copper future, we had a similar sort of pattern in copper, which is obviously being driven higher by expectations of a green recovery. We had very similar chart pattern in copper. It wasn't going anywhere for a while, and then suddenly it's just gone ballistic again. And it really basically tells us that there is basically a concern about shortage of copper. There has been some disruption to supply, no doubt about it, but it is more about anything to do with renewable energy and electric vehicles. I think really the most telling thing for me, though, is my seventh and final chart, which is the London Metal Exchange tin price. Tin is not something which is part of this great recovery story. There is a shortage of tin, which has driven this up. And as one can see, there was an initial speculative rally, which came down with a spectacular bump back in February. But again, it's climbing again. And so I think really the message from all of this is the inflation trade hasn't gone away, and it's likely to come back and haunt us somewhat during this quarter. It's basically all about the Treasury unwind of its balance sheet, but I don't think that's necessarily going to assuage us of future inflation prices, particularly given what's happening with commodities. Those are the thoughts for this week.